I've always heard that inflation is bad, but I also knew that during economic crisis, some people get very rich. So two and two didn't come up together in my head. And I decided to find out more about how I can use the high inflation rate that is very bad from the first sight in my favor. I'll share my findings and conclusions in this video. I will also share my plans and suggest some alternatives that I decided not to use, but you still might find them helpful and useful. And I really hope that these ideas will help you fight the inflation and not lose your money. So keep watching if that's something that you're interested in. Hello guys, and welcome back to my channel. My name is Anastasia. On this channel I talk about investing and especially investing for beginners. If you started investing relatively recently like me, then you've probably experienced this crazy roller coaster of events in the last several years. Pandemic, and then the market crash in 2020, then the quickest rebounds in history, then a lot of uncertainty, and now when we started to think that the worst days are behind us and it's all over, well, here we are, we have a big crisis in the center of Europe, the war has started, and all these events, they have definitely influenced the market, and they will also keep shaping the market in the nearest future. So the question that I asked myself is, how can I benefit from this total mess that's going on in the world right now? To answer the question, I analyzed the events that have already happened, and one of the clearest and easiest thing to predict in the current situation is inflation. Inflation means that our money will lose its value at a higher rate than predicted. Developed countries usually predict their inflation at 2% per year, but because of the pandemic and the money printing activities in 2020, the real inflation in the US was much higher than predicted. And in March, President Biden said that the high inflation of 7.9% that was reported in February 2022 was due to the Russian invasion and sanctions that America had to introduce towards Russia. All this made me almost sure that the inflation is going to continue and we will see high inflation in the next couple of years again. There are a lot of articles that predict the same thing, and one of them is posted on the website of the Bank of England, and it states that the inflation will reach 8% this spring, the spring 2022, and then go even higher by the end of the year. So the logical question is, how do I save my money, or how do I benefit from high inflation? The asset that gets hit by inflation the most is cash. Cash will certainly lose its value. With other assets, the fall might or might not happen, but cash will lose as much value as the rate of inflation is. For example, if we predict that the next year the rate of inflation will be 8%, that means that you'll lose 8% on your cash for sure. So my rule number one is to spend as much cash as possible. Unfortunately, I already have around 90% of my savings invested, so I was not planning to make any changes in these regards until recently. When the situation in Ukraine happened, and I don't think I have to explain what happened there, if you don't know then you can watch this video here, it made me doubt my decision, as it became clear that if the war escalates and moves to the west, I'd need to get as much cash as possible and as quick as possible. Since a lot of my money is tied up in property, I wouldn't be able to do it. So I'm keeping a very close look at the events, at what's going on there, and I'm prepared to take quick actions if needed. That's the plan anyway, and I hope that I am, but if you haven't watched one of my recent videos about panic selling, then you can click this link here. This happened to me for the first time, but I really hope that I've learned my lesson and now I will not repeat that mistake. And of course I cannot save my cash by just spending it on useless things or any assets. I need to know which assets perform best during inflation and what is the wisest way to use my money. And here we come to the topic of debt. Debt is a tool that you can definitely benefit from during inflation. Opposite to the common idea that debt is bad, when inflation happens, the borrowers win and the lenders lose. When you borrow a dollar today that has a certain value and return the same dollar tomorrow when the value of this dollar has already decreased, it's obvious that you benefit from this situation. And this is exactly what happens during inflation. And of course, all banks predict a certain rate of inflation and base their interest rates on those predictions. But in the recent years, we had a very unique situation when the inflation was super high, but the interest rates were at the lowest rates ever. Going forward, if we think that the inflation is going to be high again, we might think that borrowing money from a bank is still a good idea, but of course it depends on what you borrow your money for. And here we come to the next group of assets: property. Property usually is not an asset that grows in value fast. On average, the price of property grows at a rate of inflation. In the UK, for example, the average house price was increasing at the rate of around 4% since 2011. But in the year of 2021, the house price index was 10.8%, and everybody was predicting the market crash for 2022, and yet we had a surprise, and the average price growth for the year of 2021 to 2022 was 14%, which was the fastest growth in the last 17 years. So why did this happen? Well, people tend to think of property as of an investment where they store the value of their money. As soon as it became clear that inflation was coming, houses seemed like the best and easiest investment for many people. But the cleverest people and investors, they didn't just buy a house but used leverage. In other words, they took mortgages. Even if they had enough cash to buy a house outright, remember what I told you about debt during inflation? So those clever investors, they benefited from inflation twice. They stored the value of their money, of their cash, by investing it into property and making very good profits on it due to price increase. And at the same time, they borrowed money from banks, so they took mortgages, and now the value of the sum they've borrowed is smaller. So in a very simple language, it's easier for them to pay their debt back. Another advantage is with inflation, the rent usually increases as well, which obviously landlords will benefit from. Now looking back at the previous years, I can tell that I was one of those very clever investors, and even though I invest into many different assets, buying property and using leverage was definitely the best decision I made. Going forward, we already know that the central bank is going to increase the interest rate, which means that mortgages will become more expensive. It's understandable because banks are trying to protect themselves. Remember, please, it's not a financial advice, but I think that the interest rates will grow at a slower pace than the prices of property. And even though the deals might not be as good as they were in 2021 or in 2022, I intend to continue investing into property. So investing into a property is a cool idea, but it requires large sums of cash, and in general it's quite complicated. So what other assets can help you benefit from inflation? For example, REITs. For those who don't have large sums of money, REITs, real estate investment trusts, are a very good alternative. You invest into a fund that invests into a property for you. You can choose from many REITs that invest into different types of property, commercial or residential, also in different countries or continents, and the sum that you can start with is much smaller than when you want to invest into a real house yourself. I myself don't invest in these funds, and I'm not going to, because I already have an opportunity to buy my own properties, and I prefer to have more control over my investments. The next asset that gets very popular during inflation is precious metals, and gold in particular. When inflation hits the economy, the majority of investors, first of all, think about preserving their cash rather than earn some profits, and gold is known for holding the value at all times due to its limited supply. And it's not a surprise that Ray Dalio in his all-weather portfolio suggests to hold more than 7% of your total portfolio in gold. When it comes to gold, you can buy physical gold or a CFD. If you want to buy a physical bar of gold, then you have to go to a bank, buy it, then reserve a safe, store it in this safe, pay for this safe and pay for the storage. So it's quite complicated. If you don't want to go and buy physical gold, alternatively, you invest into a CFD gold, when in fact you don't buy anything, but you still benefit from the price fluctuations. The problem is the majority or even all brokers that I've ever used that allow me to buy and trade gold CFDs charge fees if you hold it for long term. So in reality, investing into gold for an average investor is not as easy as it may look. As for my personal plan for now, I'll use the third alternative, which is investing into companies that mine gold or are closely connected to gold in any other way. The advantages of this approach are the following. Well, first of all, with zero commission investing platforms, I don't pay any extra fees on my trades. And with the increase of the gold in price, it's almost 100% guaranteed, almost, that the price of the shares of these companies will grow as well. So before researching some of the best companies that are connected to gold industry, I checked if any of the popular investors on eToro who I already copy invest into gold, and luckily yes, they do. So I automatically invested into gold too. Of course, I have much less than 7% proposed by Ray Dalio of gold in my portfolio, but I have a good alternative, a crypto alternative of gold, Bitcoin. Many traditional investors may disagree with me, but I think Bitcoin is going to grow during inflation as well. Because there are a lot of people, new investors, tech people, who can't be sort of bothered with storing their value in physical things. They prefer digital, and digital gold of the crypto world is Bitcoin. I have no history to prove it, as Bitcoin hasn't been around long enough. I just use common sense and my logic, female logic. As you know, the government can print as many dollars as they want, but Bitcoin is different, because Bitcoin has a limited supply of 21 million. So theoretically, the price of Bitcoin will increase. If we hit high inflation, I believe in it anyway. So for the next year, I'll concentrate on Bitcoin and Ethereum maybe. I will leave new and highly volatile coins, as they are a good way to make big profits. And I still think that some of them may perform, but I think the general trend will be negative now. And in the situation of inflation, high inflation especially, the task of the majority of investors is to save and not earn. So I expect that a lot of people will invest their cash into cryptocurrencies that already have some history and over the years have proven to keep some sort of value no matter what. Of course, I'll continue investing into stocks and shares as well. But we need to know what companies perform well during inflation. So Warren Buffett has already given us the answer. There are 3 points that we have to pay attention at when choosing our stock. First of all, it has to be companies that don't just consume cash but also generate it. Secondly, they should be companies that have the potential to increase their prices at the rate of inflation and not go out of business. And the third point is companies with minor additional investments of capital and those that can hold large volumes of cash. The blue chip companies will probably perform well, but they usually do anyway. Among those biggest companies, there are a lot of companies that don't actually produce anything and they provide services, especially digital services. So I came to a bit of a dead end thinking about the companies that might perform well and will not perform well during the inflation. Coke, of course, I think will perform well because it ticks off all of the 3 points that Warren Buffett mentions. But such companies as Tesla, I wouldn't be so sure about. And again, going back to the situation with Ukraine, what do we do with the companies that invest into commodities such as oil or coal? Is it still the future? Is it still going to perform well because of all the sanctions? Or will the world now have to shift much faster towards alternative sources of energies? And solar companies would perform much better than oil companies. I tend to think that the second option is more possible than the first one, so I personally am going to invest into companies that are dealing with green energy sources. Let me know in the comments what you guys think, and thank you very much for watching this video today. I hope to see you soon. Bye bye.